Hi, everyone. Welcome to another episode of Adapt and Thrive. Today, we're welcoming Danielle Chiasson. I am excited to have her with us today. She's an incredibly experienced investor, coach, author, and we are here to hear her thoughts about the current market conditions, how she's adapting, how her students that she's coaching are adapting, and to share with you a bunch of tips and strategies. So Danielle, welcome.
Thank you so much for inviting me to your new series. I'm super excited and I love how you've incorporated this into for your audience because I think this is exactly what everybody needs.
Thank you. Danielle, tell us a little bit more about yourself for those who don't know you.
I'm a full-time real estate investor. I've been investing now for a decade and did a lot of coaching myself and invested a lot of myself before I actually pulled the trigger. And then I ended up flipping for 5 years. So skipped wholesaling, went straight into flipping because I had a bit of a construction background. COVID happened, and I actually started pivoting at the beginning of COVID. So a lot of people are now seeing the changes in the economy right now with the lenders tightening up, the rates going up and all of that. I actually pivoted my business 3 years ago, 2.5 years ago, when at the beginning of COVID, I kind of started preparing already ahead of time.
Smart. Okay. What are you seeing right now? Like with your clients, with the students you're coaching, anything in particular that you're seeing challenges with, given what's happening?
Yeah, the biggest challenge right now is making the numbers work and finding running the numbers so that you can negate risk. In the past, in the most recent history that we've had in real estate, you could buy a property, be off on the numbers, and because of the appreciation continuing to go up, that wasn't a big deal. And I think a lot of people got very comfortable taking higher risks. So I'm just telling everybody, scale back now. Scale it back, be conservative, make sure the numbers make sense, because it's really hard to speculate right now where the valuation is going to be, especially if you're doing a burst strategy, if you're doing a flip, because you don't know where the market is going to be in 6, 9, or 12 months from now. And it's really speculative. In the past, in the last 5, 8 years, we could easily say, well, it'll be at least what it's worth today. If not more, that'll just be icing on the cake. So that was an easy way to run numbers. But
Right.
now you actually have to think this through a little bit and be conservative. So I'm just telling everybody, be conservative, put conditions, run your numbers, triple check them. Don't double check them, triple check them, and make sure you have contingencies built in.
Absolutely. For investors who currently own portfolios and are experiencing some erosion to their cash flow as a result of rising rates, what are some of the things you recommend they do?
Well, they can always try to get creative on a different side instead of looking at freaking out and saying, oh my God, I can't, this isn't going to work, and panicking. Think it through a little bit and be intentional. What do you need in order to make it work? You need additional income. Is there things that you can start doing to create additional income? Two ways that it can work is by lowering expenses, because now you've got additional income, or you can incorporate things like storage lockers and charging a monthly fee for that, or you can put additional parking and charging a monthly fee for that. Even if it's to a third party, it doesn't have to be to a tenant. It could be to a third party. So if you have a tenant turnover, maybe you make it without parking and then do an add-on. And if they choose not to, then you can do a month to month with a third party who maybe works in the area, and you can advertise that. Or if you have a garage, don't include the garage, make that as a separate monthly income. So there's different ways that you can, if you have a building, you could put a vending machine in there. There's a lot of things that you can do to try to navigate these waters that a lot of people haven't been through yet. But at the end of the day, lowering expenses, lowering your maintenance, working with your tenants to make sure that that happens. I mean, also the other issue that we have here in Ontario is if a tenant doesn't pay, it's a lot harder for us to get tenants out. So how do you negate that? Make sure that you're doing a lot of checking on your potential tenants going in. So you want to be proactive and get the right tenants so you don't have those kinds of issues on the back end. Because if you're not proactive, you're going to be reactive. And
Yeah.
that's a fact. That is an absolute fact. So you can do the work now or you can do the work later. I call it the pay now or pay later program.
Yes, the pay now, pay later program. Love it.
Yeah.
I
It's
I
a
love,
choice.
yeah, absolutely. I love how you highlighted the fact that we have to focus on income and expenses. It's at the end of the day, it's a business, right?
Absolutely.
So on the expense side, you've shared a couple of things. And to that, I would add looking at the existing debt structure, because there are opportunities still, despite the fact that qualification is tougher and rates are higher. There are still opportunities to rejuggle debt in some cases to open up breathing room. So if something has gone up here, can we get rid of something more expensive there? Can we stretch amortization in some cases? Like, can we rejuggle debt to contribute to the bottom line while working on income options and some of the things that you've shared? So thank you for that.
Absolutely. And if I could just comment on that, Dahlia, I think a lot of people who are in the buy and hold space, they want to hold forever. But if you have a property that's underproducing, if you can offload that and then reallocate to a better producing property, it's no different than if you're in the stock market, say, and then you have a stock that's not performing well. Do you hang on to it and write it out? No. You look at it and say, can I sell that and then reinvest it into somewhere else where there might be a better uplift or better potential income? And so maybe it's a property that doesn't require as much maintenance. Maybe it's a property that you can acquire right now with that's maybe, 80 cents on the dollar, 90 cents on the dollar. So you buy with equity. And so you have easier time qualifying for mortgages. And then you're going to have a better cash flow on that property. Maybe you want to leave the market that you're in right now because it's not a cash flowing market and you want to exit out of that, maybe one or two properties, and go into a better cap rate market that's a higher cash flowing market in order to ride out these times. So these are things that you may want to consider. If you want to be completely stress free, you can sell one or two properties, pay one completely off, and then you have a cash flowing property that will carry all your other properties just to get through these tough times. And then you can rejig it again. Like you said, you can rejig it again. So at the end of the day, selling doesn't mean you're losing. Selling, if you're selling and then you're reallocating it, you can actually put yourself in a better position so that you can ride out these times. And I'll tell you what, again, it's about being proactive, not reactive. I mentioned that I did this a couple of years, it's been 2.5 years when I completely shifted my business model at the beginning of COVID. I knew there would be a downside at COVID. It was going to come after COVID because of all of the money the government put into the system. Now they pulled that all back, inflation kicked in, and now rates are going up. Now we're starting to feel the repercussions, and we don't know how far this is going to go. We're all speculating. Nobody knows. We don't have a crystal ball. So at the end of the day, prepare for the worst. And if that doesn't happen, great. But if it does happen, at least you're prepared, right? So I ended up shifting my model. I was flipping at the time. I shifted my model, went into multifamily, but I also left the market that I was in and I went into cash flowing markets because I knew you need cash flow in a downtime. And so I had done my research. How do you survive? 08 was a great example. Why did people end up losing a lot of money and folding in 08s? Because they were over leveraged. And so I shifted my model when I went into the buy and hold with the multifamilies. I wanted to make sure that I was not over leveraged and I had cash flow. So that's what I did. I actually absolutely did that. Exactly what you're saying, Dahlia. So don't think, I just want to put it out there for people who think, well, if I sell, I was always told don't sell, don't sell.
Yes.
You're not selling, you're reallocating.
Love that. I love that perspective.
Yeah.
You're not selling, you're reallocating, because there are clients who I've talked to and their statement is, I don't want to sell right now because I'm not getting the best price for the property. But to your point, what can you sell for that you can walk away with to clear the existing debt on the property and to reallocate, the word that you use, to other things to help carry through the cycle.
Absolutely. And then you can again rejig it. Like, stay fluid in your business. Don't have the blinders on that it has to be this way, because there are too many elements that affect our business and how we do business. And the economy is number one. Lenders are number two. There's so many things that you don't have control of that you just gotta maneuver with them. So you always have to stay fluid, and you always have to be able to rejig and move. And at the end of the day, if you can stay in the game, then you're ahead of the game, right? But this is what I'm going to tell you. People wait too long, because in order to do that, that requires a lot of work and effort. There's a lot of fear. What if I sell and I can't buy something else? I'm going to tell you right now, there's going to be a lot of opportunities on the market. A lot. They're there now, and there's more to come. So if that's the fear you have, just wash that away. All of the gurus are putting their money liquid right now so that they can be in a position to buy. It's coming. I think it's coming. I don't have a crystal ball, so don't use my word for it. But you don't want to have to be in a position to sell when you're forced to sell, because that's where you're going to lose. So make the choice, be intentional, have control over it, and make that decision. Don't sit and wait, because if you sit back and wait and you see that there's some red flags there and you ignore them, you're going to just get in deeper and deeper and deeper. And then you're going to be forced to sell, and you won't be able to reallocate or reposition, because now you're not in control.
100%. Thank you for these nuggets of gold. So be proactive, reallocate, and you talked about not over leveraging, which I have been a proponent of even before these interest rates went up, because I've seen investors take on private money that is so highly leveraged, and it did sound cool that they're taking private money, that is highly leveraged because, they have little in the deal, but unfortunately we're getting approached by investors who are upside down with value because they took very high leverage at the height of the cycle, and they're renovating or we're hoping to sell or burn, and the values kind of soften. So now the debt is not payable where compared to where the values are. So I love your comment about avoid high leverage. That's something I believed in all over, like not just now, but throughout how we do mortgages. And you talked about opportunities. So that takes me to the next question. Are you currently sitting on the sidelines waiting for the prices to come down? Or are you continuing to look at deals and run your numbers?
So I'm always looking at numbers. Like, I'm always looking at deals, and for the right deal, I'll buy. But right now, I'm not seriously looking at deals because I'm rejigging my whole coaching. I'm not doing one-to-one. I'm going to be doing one-to-many now, and I'm going big with the coaching. I think especially now with these times, because you didn't need to know a whole lot about real estate. You just needed a realtor to point you in the right direction. You needed to be able to get the mortgage and get the house under contract, and maybe hire a property manager to put tenants in there for you. I mean, some people have really gone into real estate with no knowledge and done really well. And they're now going to see how that's going to hurt them. And I want to be there to help them through by having courses based on what their needs are in that moment. So a lot of things, landlording, a lot of people are going into buying holds for the last 5 years, and they have no idea about our strict tenancy laws. They know they're there, but they're like, nah, it's not going to be me. So there's all kinds of different things out there, and I just want to help educate. So I've actually put my buying on hold for now. The timing, actually, and I had decided this actually in January. So it was before all of this happened. So the timing actually just coincided really well. So it wasn't me actually, having some sort of foresight. It was just by pure luck. I said, I don't want to buy anymore. I knew that there was going to be a shift in the economy, but everybody's been saying that for, 8 years now. So at the end of the day, I'm just not buying, but I am looking. I am actually working on a deal right now. It's a fairly large deal, and we're just really analyzing the numbers to make sure it works well. And so the deal that was presented to me, and then I did my adjustments on the numbers, there's a big gap because I'm very conservative and they're working with some optimism. And so not sure if that deal will come together, but at the end of the day, I am restructuring. And to your point is, what can we do different now that we might not have done 2 years ago? Let me tell you, on this deal in particular, what I'm doing different is I am, instead of me looking at buying this deal, they own the property. I'm actually looking at restructuring it where we can work together on it. And then at the end, both benefit. So rather than take the property, buy it, and take on all risk, I'm bringing the owner in as a partner and saying, look, let's work together. Let's put our resources together. Let's pair up. And I'm happy to take less on that deal in order to negate some of that risk and to ensure a better numbers. Because if he's coming in, I'm going to get the deal for less, and rather than have to pay a premium, right? So I am shifting how I'm doing it. There are other creative ways that you can look at things rather than just buy. Maybe you can work with the seller or the owner or the wholesaler, wherever the deal is coming from, right? And see how you can work together.
Love that. You've actually shared a unique way of structuring a deal that I haven't come across before. And it's all around, of course, structuring a win for everybody. But what I'm hearing is managing risk. And it sounds to me like you're doubling down on managing risk in this market ahead through extra diligence, through new ways of structuring deals, it sounds like. What else are you doing to manage risk, or you're advising your students to do to manage risk as they go shop?
Yeah, the easiest thing that you can do to manage risk is to be super conservative on your numbers, number one, and make sure you have conditions to give yourself more time to do your due diligence, because a lot of people have gotten very comfortable to not do due diligence and go firm on a property very quickly, if not right away, very quickly. There's like 3 days for financing. That's, that's just not, by the way, that's not a healthy market. I've never liked the market that we've been in because it's not healthy.
Yes.
But at the end of the day, I think right now we're moving into a more balanced market where we can now have conditions, we can have time to take a look at the property, do our due diligence, look at zoning, look at what it is we need to do. And also to have the conversations with you, Dahlia, to see, what do I qualify? And realistically, what do I qualify for? And what is it going to take for me to be able, how much capital in order for me to be able to see this through to the end? I think a lot of people don't plan properly with how much capital they're going to need till the end. They say, okay, I'm just going to raise the capital now for a deal, and then I'm going to deal with the rest that I need in order to do the uplift or whatever it is that I need to do on the back end. They're like, I'll deal with that later. But right now, getting money is very difficult. And so I really caution people to make sure you partner with people that will be there with you through the end, and don't bank on money that's not in hand, because I think that's probably one of the most dangerous things you could do right now.
Beautiful. Danielle, my last question to you. You're an incredible real estate investor and an incredible coach. I got to know you a little better on the personal side through a previous retreat that we did together. And I love your mindset. I love your energy. And I thought I'd ask you this question. I know it's not a technical question related to Adapt and Thrive, but it's kind of related. There is a lot of fear and negativity going around right now. And there is pain as well, real pain. Higher prices, pressure on cash flow. What do you do on a daily basis to think clear, to calm down, to energize yourself as a real estate investor and a business owner to adapt? Because yes, there are the technical things and technical knowledge that we're all talking about and sharing strategies and tips, but I believe there is a foundation that we all need to strengthen right now at a personal level to be able to handle a lot of these things better. So what do you do?
Honestly, Dahlia, I think we're gonna have to come on and do a whole nother segment just on just on mindset. I'm telling you, I could talk for days and days and days about this. And at the end of the day, mindset is where it all begins. Truly, your health is number one. Your mental health in particular, and how you process things, which is your mindset. So your mindset, your core belief, and if you want to be healthy, it is a trifecta. Your diet, your exercise, and your sleep. And my kids cringe when I say sleep hygiene. They're like, why do you say hygiene? It's like so weird. And I'm like, but
Right?
those are the things. So that's like the trifecta. You need to eat right, you need to exercise and release some of those endorphins, and then you need to sleep well as well. And so if you don't do any one of those, it's going to throw the others off balance, and it will affect your mental health. And so if you're not mentally healthy, it doesn't matter about mindset anymore. So you have to be mentally healthy first, and then you can work on mindset. I cannot work with anybody on mindset if they're sleeping 4.5 hours a day.
Yes.
It's just not going to work.
Yes.
It's not going to work. You're too tired. You can't focus. You can't, like, you have to take care of yourself first. So first thing is to put yourself first. It was really difficult for me to understand this for a long time because it felt selfish. And I know there's some people out there that can relate to this, especially the women. And I'll tell you why I know, because it was me. So when you put yourself first, it feels selfish. But you know what? That is just your belief. That is your mind lying to you. I'm going to tell you right now, the best analogy that I can use is when you go on a plane and you have somebody that's 3 years old with you and you're responsible for them, the worst thing you could do is tend to them first. If you have a lack of oxygen in the cabin, you have to put your mask on first so that you're healthy and can think clearly and have the ability to put on their mask. So don't be afraid to put your mask on first, and especially the moms out there. I am telling you, there is a gender difference here. And women tend to put others first because that's just been bred into us for centuries. And so overcome that. Just think about the mask and think about when I'm healthy, I can be present and be helpful and be there for everybody else around me. And that was a big, big, big mindset shift for me. And then after that, I was able to sleep better, eat better, and exercise better because I was putting me first. Now, when it becomes selfish is when you're putting you first at the expense of others and hurting others. But if you're not doing that and you're not being malicious, there's absolutely nothing wrong with putting yourself first. So be healthy so that you can be there for others. At the end of the day, that's what it boils down to. So to answer your question, what am I doing? I'm doing 75 hard. I'm starting it in a few days. I have been prepping for the last 3 weeks. I think it's a special kind of crazy for people to be able to do that, but it is actually a mental toughness challenge, not like a weight loss or health challenge. There's just that kind of that health benefit, but I want to, get up more consistently in the morning at the same time and go to bed at the same time every night. I struggle with that. So, practice what you preach, right? And so that is one of the things that is my challenge, one of my many, and God only knows there's a lot, but that's one of the ones I'm working on right now. And then just get my sleep in order because nobody's happy when they're tired. Let's just face the reality, right?
Yeah. Don't want to be that side of me when I'm cranky and not sleeping. But thank you for sharing these tips. And I think in the midst of all of this, there is a lot of focus on technical knowledge and debt and income. But aside from all of that, we have to manage this. And
Absolutely.
that's through eating better, sleep, taking care of ourselves, creating space. And that's going to help us all see things clearer, calm down, and make better decisions at these times. So thank you for sharing your strategies and what you're doing. Danielle, where can our listeners find you if they have any further questions?
Well, I do have a Calendly link. Maybe I don't know how you're structuring this. I can give you a Calendly link where is it on YouTube where they can post in the show notes?
We can put it in the show notes.
Yeah, okay.
So they can get in touch with you?
Yeah, so they can, if they want to have it like a Zoom call with me and like a 20-minute call with me, they can do that. Or if they want to be, if they just want to have a quick chat, you can DM me on Instagram. It's at Dani Chiasson. Actually, it's at Danielle.Chiasson. I don't even know. So Danielle Chiasson, let me spell it out for you. Chiasson. And on Facebook, I know the Facebook one is facebook.com/Danielle Chiasson. So you can DM me there anytime. I am always available to people who are looking for help. And so I'm more than happy to be there for you.
Thank you. And I know that you share, you give, and yeah, we'll make sure that we include these in the show notes so that anyone who has questions can get in touch with you. Thank you so much for your time today and for the knowledge that you shared with us.
Thank you so much, Dahlia. It's been an honor and a pleasure.
Thank you, Danielle. Take care.
Bye for now.
Bye.